Someone had to ask. I'm Amy Viaclia, and this show is built on one idea that good questions asked of the right people make all the difference. Each episode, I sit down with someone who has the expertise that most of us don't and ask the questions you might not know to ask. Someone had to ask, so I did. In our first episode, I introduced Jay as my brother and the person who has answered more of my mortgage questions than anyone. What I didn't get into is how he ended up in the seat he's in now, or why that seat looks different than a lot of the other people you might talk to when you're buying a home. There's a bank, there's a retail lender, and there's a wholesale broker. Most people assume those are all more or less the same, where the same thing wearing a different sign. They're not. And Jay has actually worked inside more than one of them before landing where he is now. Today, I want to ask him to walk us through that difference and to tell us why, after seeing this business from more than one side, he chose to build his career as a broker. Jay, welcome back to Someone Had to Ask.
Thanks for having me.
Jay, before we get into the different types of lenders, give us your story. You've been in this industry more than 20 years. What has
Mhm.
that path actually looked like?
Well, it started out in Louisville, Kentucky, First Commonwealth Mortgage. I actually went to work there because one of my best friends from college was doing really well in the mortgage business, and he gave me a call and was just like, "You can do this." And at that time, I really didn't even know what a mortgage was. So it started out like I had no idea really what I was getting into. So I started out, and that was in November of 2002. And then I was fully licensed the very beginning of '03. So started out with a broker. First Commonwealth was a broker back then. And that's how I started, just looking at multiple lenders to take the loan to. And then from there moved and a couple years worked at First Commonwealth. Then took the plunge of owning my own mortgage company. That was a real experience. That was from around '04, 05 to '09. Um, Stayed in business with that mortgage company until the mortgage, what they call the mortgage meltdown, the restructuring back in '09, 2010. And it was a better idea for me to pivot and go to work for what's called a mortgage retail lender. They used to call them net branches, where you can work under the umbrella of a bigger company, but not have to deal with all the compliance um, that comes along with it. That's a whole job in itself on the back end that nobody ever sees. How much compliance, how important it is on every file, because you get audited. Banks, mortgage lenders, we get audited every year. And I got audited every year when I owned my own company. And I'm going to tell you, it was probably the most nerve wracking. I didn't sleep, not because we did anything wrong, just because the auditor is just going to go through. And if you don't have something in the right order, you can get not fined, but there'll be a write up, there'll be a mark. So it was always nerve wracking. So it was nice to pivot away from owning my own mortgage company to going to work for a branch, just to take off that kind of pressure, I guess the best way to put it, because it's a whole other job in itself. I got away from being a loan officer to doing a lot of compliance. I didn't want to do that. It's not what I'm good at. So went to work for another mortgage retail lender, Nations Lending. Worked with them for a long time, and then moved on to another mortgage lender, PRNG. They're really good. They were great to work for. But ultimately, here in the last year and a half, before I came to Barrett Financial, I had previously, just like what I was saying, worked at a retail mortgage lender. I also worked at a bank a couple of years ago because I wanted to get involved with that side of the mortgage process. I wanted to see if that was better. And there were advantages to working at a bank. I liked it. Enjoyed working at the bank. I liked having the nice office that that a bank had. That was fun. I felt like really important whenever I'd come to my office at the bank a few years ago. But there were downfalls working for a bank that I can get into. Um, but then ultimately just decided from my experience with the bank, my experience working at retail lenders, direct lenders, um, getting back to the broker side of things was really where it suited me best, um, mainly because of the interest rates are lower, and I simply got tired of getting beat by a lower rate. Whenever I would compete with a mortgage broker, especially when I worked at the bank, I knew I was not going to get the deal. I knew because I mean, if somebody's going to offer you 5.5 and I can only offer you 6%, it doesn't matter how much they like me. You
Right.
got to go with the better deal. It's nothing personal, you know. Um, you will get people at the bank though that will stay loyal to the bank, and even there was lots of loans I did at the bank where I knew this person could get a low rate, but I mean, I couldn't tell them that because I mean that's business that the bank would be losing. So I couldn't say that, but I knew it, and it bothered me because I just wanted to be able to offer the lowest rates available, be more flexible on what closing costs can be. Because working at a retail or a bank, sometimes the underwriting fee is what it is. Processing fee, they have their own internal rules where they have to be charged on every loan. Whereas working for a wholesale broker, you can be a little bit more flexible on how fees are covered versus working at a retail lender.
So let's talk about that a little bit more. So let's define these terms because I
Okay.
think people are using words, they don't even know what they directly mean because they mean different things. So, what's
Mm-hmm.
the actual difference between a bank, a retail mortgage lender,
Mm-hmm.
and a wholesale broker? You've touched on it. Let's just put those dividing lines down.
Okay. As far as the bank goes, if you want to have a relationship with your loan officer and you want to have your checking savings all in one spot, there is advantages with doing that. The difference there, as far as a bank and where I am now, is the underwriting. Underwriting can be a lot tougher, um, and that was ultimately why I left the bank. Is because underwriting uh, sometimes their personal opinion would creep in how they underwrote the file. And if that underwriter didn't like something, they just it'd be over. It would be what's called an adverse loan. That's just another word for a turn down. And that frustrated me to no end, even though, because I had several files that fit the guidelines, but the underwriter, for whatever reason, didn't like it. And I thought that was very unfair. So that's what you can run into at a bank. Especially if you're someone with maybe some tricky income, maybe you've had some credit issues in the past. The bank's really not the way for you to go. Um, Now you can, as far as a mortgage lender, a direct lender like PRMG, I worked for them for years. They were a fantastic company, one of the largest lenders, kind of like Rocket. Everybody's heard of Rocket Mortgage. It used to be Quicken, but PRMG's right there. Penny Mac's another one, but they're similar to the wholesale broker, closer to them to the bank. Um, the only problem with a retail lender and the bank is their rates are going to be a little higher, and the reason for that is they have overhead. They have to pay. They've got to find a way to pay for their underwriters. They got to pay for that office that I had in the past. There's just that kind of overhead. And that's what moves me over to the wholesale lender. The difference is we don't have that overhead, that cost. So that's why I can go in and typically grab an interest rate that's a 0.5% lower than most banks or retail direct lenders. Um, those banks and retail lenders, they have to have a little bit higher of an interest rate because they'll get paid, they'll get compensated by the rate that they provide for you. So they set what's called a margin, and they'll set the margin that way. Every loan that closes, they know that they're going to make X amount of dollars,
Mm.
and that's why the rate's up a little bit higher. Whereas I go in and look, and as a wholesale broker, that overhead, that rate, there's no margin built in. So it's kind of like me going to a wholesale. Think of a warehouse of Nike T-shirts. If I'm going to that warehouse and I'm going to pick for you, I'm probably going to find a deal that's $5 for that shirt. Versus if you go to a retail mortgage lender, or if I work for a retail mortgage lender, that shirt's going to be $8 because they have to make their money somewhere because so
Margin. Yeah.
they have to, there's that margin. So if you're at a retail shop buying that T-shirt, they have to have the margin. They have to make their money. Where I'm going straight to the warehouse, and there is no overhead. So that's the big benefit with talking to a broker.
So you've spent some time on in each of these areas, and you've talked a little bit about where each one fell short for you. But what did working at a bank or in retail teach you that you carry with you now?
Okay, as far as the good points, at a bank, they have what's called portfolio loans. That's the big separator. Probably should have said that a minute ago, but portfolio loans at a bank, those are the ones that they create. Like they underwrite their own way. They still follow standard underwriting guidelines, but they can be a little quirky. Like the loan programs aren't offered across the board. Like there was a no money down first time home buyer program that was what I don't have access to. But it was because the bank had that as a portfolio loan. It's one of theirs. Like they created the guidelines to a certain degree. Okay. So that was a good point with the bank. I really liked that, them having a few niche programs that were really good. That doesn't mean the rate was better, but they had the program that was, I thought, better in some cases. Um, so that's what I took away from the bank as far as a positive. So they do have some advantages there with their portfolio loans. Now, mortgage, as far as a direct lender, that they were nice because you could work. I could get to know the underwriter a little bit better. Same way at a bank, you get to know your underwriter a little bit better after you send several files. You'll typically get the same one. So some you develop a relationship with. So that was always I enjoyed that. But moving again, moving to the broker side of things, uh, the best thing for where I am now is being able to essentially shop for you and find you the best deal. Whereas, say, a mortgage lender and a bank, you are going to be confined to the programs that they have. You have to fit what they want. Okay. Whereas with a wholesale broker like myself, I can go look at, 100 different lenders. Now I have my top 20, uh, technically top five, but we have access to every lender. So if you are someone that has maybe a niche thing at your type of loan, like for example, a non-qualified mortgage. See, we have lenders that'll do that, and not all retail mortgage lenders offer those types of programs. Whereas I have access to everyone, and I can find which lender has the particular program that we're looking for, and always comes with a lower interest rate. So that's ultimately why I left the bank, left mortgage lending as a direct lender, and went to the broker side is straight up because the interest rate is typically a 0.5% lower, and closing costs can be less, and just more in control.
I want to go back into uh, this direction of you being asked to be in this business in the first place. And you're like, what in the world is a mortgage? Like,
Hmm.
what is this? So you've been in this business over 23 years.
Yep.
What keeps you in this business? What's your why?
Oh, oh, it's every loan is different. I remember, the first loan I closed, I mean, over 23 years ago, and I still had that same feeling today. The feeling of someone trusting you to take care of their mortgage and put the whole loan together. That to me is just the most gratifying part. And like I've mentioned in other episodes, no two loans are alike. Everybody's loan situation is different, and that's what I've always loved. I've always loved being able to solve a problem. Lots of times, your loan officer is a problem solver. We have to find ways for you to be approved, not just because not everybody walks in with an 800 credit score and 20% down. I mean that's just not reality. Your most people that I've spoken to over 23 years fall. I've had perfect credit, middle of the road credit, bad credit. So we have to find solutions for everyone. And the ones I like the most are your first time home buyers and putting together different scenarios, different programs. And that's always been just super gratifying to me, that mainly that they are trusting me to put their mortgage together.
Well, I know two things that have come up for you a lot are that freedom and negotiation power. So,
Mm-hmm.
what do these actually look like on the day to day? What can you do for a client now that you couldn't do before in any of your previous jobs?
Yeah. Well, what we can do now is I have access to every loan program on the market, on the secondary market. And that's that's the best thing. That's what I like the most, because I know that the deal that I can put together for someone, whether they go with me or not, if they're going to have all the options in front of them. You don't. There's two different types of no money downs. There's down payment assistance, then there's USDA or there's VA. You should be able to have the opportunity to look at all those options. Um, Although VA is probably the one of the best loans you could possibly get, um, it still might not suit that person. That they might want to just do a conventional because they don't want to pay for maybe the funding fee that VA requires. And that, there's certain quirks. There's advantages to different loan programs. So that's what I've enjoyed the most. But the challenge is always finding the right program for someone, and off and being able to offer the lowest interest rate.
What is the biggest misconception people have about working with a broker instead of just walking straight into their local bank?
Okay, so the biggest misconception would be, as far as a broker, is that that closing costs are going to be higher, and you're just talking to someone that doesn't really care about you. I mean, because that's what you think about a broker. It's like they have access to all they don't really care, and that's not the case. That's very misleading. Um, but the main difference is simply the interest rate. Um, just with the margins at a retail bank, retail lender, and a bank. Um, that's just what that drew me away, um, and decided to go to the wholesale side.
Okay, Jay, if someone is trying to decide who to even call first when they're starting that home buying process, whether it's a bank, a retail loan officer, or a broker, what should they actually be thinking about?
Well, if you want to go with your bank, there's no problem with that. I mean, if you want to have that a relationship with your loan officer, you walk in to the office and sit, and if you want that type of relationship, go that direction. There's nothing wrong with that. You might be. I didn't really see any advantages whenever I was at the bank. It's like you had your checking savings. The only people just might want someone might just want to have all everything all together with their bank as their mortgage holder, as where they have their checking, savings, whatever else they have, car loan. Some people want that. I think that's more of an old school way of thinking. I don't think I think our generation has become way more open to looking at, oh, I don't have to go to a bank, because that can be nerve wracking walking into a bank and applying for a mortgage. It can be more strict. So I forget the question that you asked me. I trailed off
Yeah,
it.
just what are people needing to consider? Uh,
Oh,
yeah,
yeah.
what do they need to really think about?
And well, as far as your bank, again, it's if you want to have that relationship, that walk in, if you want that, there's nothing wrong with that. Just know that your rate might not be as good as what you could get it, even at a retail mortgage lender. They're very close. But if you want to think about a retail lender, that there's nothing wrong with that because they're a direct lender. They will underwrite the loan what's called in house. So there's no big huge advantage with that. I thought there would be whenever I worked at a retail shop. I mean, it was nice for the loan officer to be able to communicate well with the underwriter, um, just because you establish a relationship. Um, but as far as going through, like, say, Movement Mortgage or PRMG, who I used to work with, or Quicken, not Quicken now, it's Rocket. There's nothing wrong going through them. They have lots of the same programs we do, all the same programs that I have access to for the most part. It's just that you're going to be handicapped with the interest rate, same way, because of their margins. They're going to have a lot of programs, but the rate's going to be a little high. And then with the wholesale broker, what you can expect is for one person to shop for you the best deal. It's that simple.
Jay, I think this is a conversation a lot of people never think to have because most of us don't know there's a decision to make before we even get to the rate sheet. We just call whoever we've heard of.
Mm-hmm.
And listeners, if this gave you a clearer sense of who you're actually talking to the next time you're shopping for a mortgage, that's exactly what this show is for. If you found this conversation useful, share it with someone who's about to start the home buying process and doesn't know where to begin, or who's never thought to ask what kind of lender they're even working with. Next time, we will be talking about the big engines that move mortgages, that set rates and approvals. But we'll leave it there for today. Someone had to ask, so I did.